Good evening, family. Welcome, and let's start this one off. I want to go into what makes sound money, or what are the kind of principles, or at least the definition and examples of sound money. So I'm going to go into that and compare and use Bitcoin as an example, and then also use some other assets at the end of this presentation. So I'm going to start with Aristotle's definition of sound money. There are 5 principles to that. We will go into each one of them. And I want to know and answer that question. Does Bitcoin have the properties of sound money? Why or why not? And then, like I said, we're going to look at other assets and money that could fit into this definition. So let's kick it off with Aristotle's 5 criteria for sound money. One, sound money has to have durability. Two, has to have portability. Three, has to have divisibility. Four, has to have fungibility. And 5 has to have intrinsic value. I am going to go into the definition of each one of these, and then I'll also give examples, and I'll also relate it to Bitcoin. So let's go through it. So since we're defining our terms, according to Aristotle, sound money has to have durability. What is the definition of durable? Able to withstand wear, pressure, or damage. And let's look at Bitcoin. So Bitcoin currently occupies a digital space for the electronic transfer of value. And interestingly enough, there's no physical presence for Bitcoin for any wear, pressure, or damage. Now, outside of solar flare and, God forbid, another Carrington event, I always tell people I don't have the asteroid plan. So if the asteroid hits or the Carrington event happens, part two, I'm going to have a lot of other problems to think about rather than my Bitcoin. So, looking at this at least from the first principle from Aristotle on sound money, it looks as though Bitcoin does satisfy principle number one, which is the durability of it. So, two is portability. Let's define portable. Portable is possible to carry or move about. Interestingly enough, looking at Bitcoin, we have what? Web accounts, we have our own self custody, we have smartphone apps, we have QR codes, and you can transfer this across borders. You can access any economic system that utilizes Bitcoin, and obviously it can be sent to anyone around the world with a Bitcoin wallet. I think this actually allows much more than other forms of currency or even money that could be halted at airports and have to be cataloged and reported to governments and things of that nature. Bitcoin's one of those that if nobody knows you have it, nobody knows you have it. And you can go around the world and go to places that utilize Bitcoin, and literally with your own phone in your hand and your device in your hand can actually become part of the economic system and whirlwind that happens around the world. So looking at portability, I think it's fair to say that Bitcoin does satisfy the second dynamic and the second feature of Aristotle's principles of sound money. Number 3, divisibility. What is the definition of divisible? Capable of being divided into smaller amounts. As we know, if anybody's used Bitcoin, can be divided into 100 millionths of one Bitcoin. And for the math people out there, that is 8 zeros and a 1. And if you're unaware of that, these individual units are called Satoshis, smallest divisible unit of Bitcoin available. That makes Bitcoin quite versatile and very attractive for economic transactions. Particularly as time has gone on and definitely going on into the future, you're going to see that less and less Bitcoin is probably going to be able to buy more and more shit, as opposed to the US dollar, where it takes more and more dollars to buy less and less shit, as time goes on. So having that kind of divisibility for economic transactions, quite important, I would say. And definitely Bitcoin does satisfy that third principle of Aristotle's definitions of sound money, divisibility. Fourth one, fungibility. Let's define fungible. Fungible is replaceable by another identical item, mutually interchangeable. That's actually the key definition here. So as an example, if I lend my friend 1 Bitcoin, does he or she have to send the exact same Bitcoin back to me to satisfy that debt? No, they can pay me back 0.25 Bitcoin per month for 4 months, or they could pay me back 0.1 Bitcoin per month for 10 months. It is fungible I don't need the exact same thing that I lend out for a transaction in order to satisfy any debt that I actually give out. Compare and contrast this to, let's say you had a brand new Infinity Q60 silver, beautiful car, and you decide to lend it to me for a week. And I say, great, I'll bring it back on Saturday. And I drive off in your brand new silver Infinity Q60. And then I return on Saturday and I pull up in your driveway with a 1979 lime green Datsun station wagon. Think you'd have a probable problem with that accordingly. So other items that are non money related, not exactly fungible, but if money is supposed to be considered sound to fulfill this principle from Aristotle, then fungibility is definitely a big feature of that. And as you can see from this example here, why that is. US fiat is the same way. If I lend you $100, I don't need that exact $100 with the exact serial numbers on them back to me. I could take 520s, I could take 10 ones, I could take a bunch of quarters and dimes if I had to. But fungibility allows money to have that principle where it is transferred easily and also replaced easily and interchangeable. Considering what you're looking at with Bitcoin, seems to satisfy that fourth principle of Aristotle's rules of sound money. Now, the last one, some of my hardcore colleagues and friends in the economic realm debate this fifth principle, intrinsic value, over and over again. I'm going to go into why they're debating it, and then also why they also use it as an argument against fiat. So you can't have it both ways. But intrinsic value, Aristotle was definitely thinking of gold and silver, definitely a sound money that was used during his time. So let's go over intrinsic, which is essential nature of a thing, and then value, importance, worth, or usefulness. So gold and silver makes sense in the case of intrinsic value. Silver definitely for its industrial properties and items that it's used in around the world, besides just money transfer. Gold, the same thing as well. So let's ask a couple important questions about Bitcoin to see if it fits into this intrinsic value spot. One, can it be counterfeited? No, because it's technological code accordingly. And each Bitcoin, once it's done being mined, fills into the second question: is it scarce? 15 years ago, maybe not. So, but we know that there's only 21 million that are ever going to be mined. So, in the future, it will be very scarce if it isn't getting to that spot already for people buying it up in large quantities. And do markets accept it as payment? Yes, they do. I was in Charlotte, North Carolina, not too long ago at a bar, actually, and they had a QR code scanner on the bar. So you could order drinks or food, take your smartphone out if you had a wallet that had Bitcoin in it, scan the QR code from your phone and your wallet, and you could pay for that meal in Bitcoin. I think it's only a matter of time before the rest of the merchants jump on accordingly. That transaction could be settled in 12 to 15 minutes with Bitcoin. Compare and contrast to swiping a Visa card, where merchants are charged money to do so. And then on top of it, it takes 2 to 3 days to clear the transaction. It would make sense why merchants might go into this direction, at least with as what we would consider the granddaddy and godfather of all electronic money that we're looking at in the form of Bitcoin. Now, what happens if other cryptos become accepted as well? Whether it's Ethereum, what happens if XRP, takes off into the stratosphere, and you've got, you can buy everybody in the bar that night drinks and food, as far as that's concerned, if that's the case. If you have the ability to exchange and markets accept it, then this would fit into the intrinsic value spot. The argument with some of the hardcore economics people I talk to about they're looking at this from a standpoint of, why is intrinsic value even important? Because the fact that markets accept it or don't accept it should be all it needs to have that kind of intrinsic value. Where this is where the one argument against fiat comes in, because fiat is just paper, and every fiat in the history of the planet always goes back to its intrinsic value, which is the paper it's printed on, which is nothing. So looking at gold or silver, yeah, definitely intrinsic value. Bitcoin also satisfies this as well, looking at the last and final and fifth criteria under Aristotle's principles for sound money. Now, let's compare some other assets as well. And what you're going to see is something interesting at the top and at the bottom. You know, Bitcoin, I mentioned, fits into all of these. That's why the green check marks are there. So does gold across the top. But when you start to get into different assets or commodities, the US dollar fits into all of them except for that intrinsic value spot. It can be counterfeited. Is it scarce? Not really, because it keeps getting printed into the stratosphere. We've seen examples of countries with hyperinflation. They didn't make their fiat very scarce, and they were able to counterfeit it themselves too, printing it over and over again to the point where you have $1 trillion bills. Don't think that's healthy for a society, and definitely not for an economy. But then you get into other things like oil. Oil's durable, it's fungible. You know, one little souffle cup for another doesn't really matter. Um, Oil obviously has intrinsic value from its use. Is it portable and divisible? Internationally or across borders? Probably not. Not the exact thing you want to be carrying around with you as you're traveling from country to country or state to state. Real estate, looking at that as an asset, durable, yes. Has intrinsic value in the nature of property, yes. Not very portable, not very divisible, and not very fungible either, at least on that end. So, you can't, my house for your mansion, my duplex for your 3-floor condo, not exactly something you can trade back and forth. Businesses are interesting because the durability could be yes or no. I put the green check mark there because I don't think humans as rational actors would get into businesses that would be tanking. Like I said, don't be the guy who shoves all their money into a horse and buggy business as you're watching the first Model T drive down the road. I'm sure there's a lot of things nowadays that people would not invest in that are extinct as far as business models go. I don't see too many Orange Juliuses around. If anybody remembers that from the 70s in the mall. I don't see other business models that are no longer uh, really useful in modern tech world because everything we're doing is digitally, and a lot of the businesses that couldn't keep up with that. How many typewriting schools are out there, or how many typewriting merchants are out there selling typewriters to law firms. Maybe if you have a 90-year-old lawyer who refuses to jump onto the internet, that's one thing. But from a business model, if you're looking at durable, yes. Divisible, yeah, it can be. I mean, what do you think a stock is for when a company is divided up into its own shares so shareholders can pay attention to that and participate in that? And does a business have intrinsic value if it's, again, done by a rational actor and they're generating revenue, solving a need in the community? Yeah, sure. But it's not very portable unless it's, you grab up this laptop and go somewhere else, and not very fungible either. But then again, at the bottom, as you're looking at Bitcoin, it solves all 5 of those criteria from Aristotle on sound money. And with gold, you could also put silver in that category as well. I just didn't put it at least on this end. So summarizing this, and the reason why we do this is to see, what am I investing in? What am I putting money in? What am I expecting growth from? If you're using these 5 principles as a guiding light for whatever you're going to invest in, particularly in the crypto world, now let's get out of Bitcoin and start asking yourself, keep number 5, intrinsic value, in mind when looking at other crypto. First thing you want to ask is, does it have a utility? Some of the things that we've discussed, at least on this channel, some of the things that Lou discussed on his channel, and Electric Buddha, and the other ones that you listen to, we're looking at utility coins. Do they have a job to do by their very nature intrinsically? Does it have value outside of its coin price? You've heard about the stories of people making millions from shit coins simply because shitcoins are basically a marketing campaign. It all comes down to marketing, because once the hype and the pump is done there, the rug pull comes out. There's no job or utility for it to do on the other end of whatever we're looking at here. So keep that in mind when you're putting money into that. Can you make money out of it? Yes. Pure speculation, though. Do you want to be a speculator? Or do you want to be an investor? That's the question. And then what will that utility be in the future? I think we've outlined quite a few of the assets that we're talking about investing in on this potential bull run that's happening. So moving money around from one play to the next play to the next play, you're better off going into the game knowing what the utility will be, and will there be intrinsic value on the other end of that regulatory environment, whatever that looks like, and wherever we get to. So just throwing this out there, family, thinking ahead, thinking outside the box, keeping yourself grounded, not getting emotional in this, and just follow the plan, set up the plan, follow the plan, then execute the plan, as I've always said. So there will be more videos to come. Stay tuned. Giant hugs.